Now, it's been a while since I did record a video so that you can use on your analysis. Now, in this particular video, I want you to just sit down tight and then watch what I'm going to be doing on my charts. However, this is a trade setup that I'm going to currently be taking based on my not new strategy. I now stopped looking for new strategies because of something I implemented in my trading to ensure that I keep stuck to the same strategy. Now, this is something that, with a little bit of experience, you will build your own edge. However, other people have already put out things that already work. However, it's your own responsibility that you learn how your mind really works. Now, in this strategy that I'm going to be teaching is basically just about SMC and then also using the concept of hedging. Now, hedging is not something that is bad. However, majority of prop firms and you know some okay, it's only prop firms, brokers, of course, they are legit brokers that can allow you to hedge as long as you're not violating or you're not doing any fraudulent activity. Now, without further ado, I do not wish to always make my videos very long. I want to make them as educative as possible for you. Now, it's been a while since I executed trades on one particular account of mine, and practically I'll also be doing it so that you can learn what to do. If you are not allowed to hedge on a farm, I'm also going to be executing a trade right now so that you can learn how best you can also apply this strategy of mine. Otherwise, let's jump onto the charts and then you'll see what to do. I'm going to execute these trades for you so that you can learn from them as well. Now, what I do have here is what they call the US dollar index. Now, the dollar index, like I explained in my previous videos, simply measures the strength of the US dollar. Now, if you're going to be trading the US dollar, you always need to gauge its strength. Now, the US dollar index, of course, in some brokers, they allow you to trade it. However, it's a non-tradable indices, but it helps you a lot to gauge where the US dollar is going to be going. It has other currency pairs which it uses to measure the strength of the US dollar. The bigger one is, of course, the euro US dollar, and you can trade it inversely with the euro USD and then other pairs such as the GBP USD. And of course, the best one that you can use for trading it is also USD JPY. Now, I always love to keep my setup very simple. What I simply do, and I'm going to repeat this again for your own sake. Now, I normally just go onto the daily time frame. I can use either of these, either a line chart or a candlestick chart. Now, this is what I do. I don't like to complicate things. I want my trading session to be at most only 10 minutes in my day. I really don't have time to spend on the charts anymore. I just come look, is it below the 200 EMA? It is still to the downside. Now, if it is still to the downside, the best thing that I can do is now to jump down to my lower time frame. Now, for me, what I do, I don't complicate my trading. I mark the most immediate, swing high and swing low on my chart. That is all that I do. Now, the reason why I simplified my trading and I normally just stop on the 4-hour chart because others is now just noise. I mark the most recent high and low and just wait for a breakout out of any of them. I just wait for a breakout. Now, for somebody who is, of course, trading SMC, what you're going to be aiming for is you're going to be waiting to identify the last break of structure here, and then this is your last break of structure, which I just call a liquidity grab for me in this case. And then what I'll be simply doing, I'll just be waiting for a market structure shift, in this case right about here. Now, once I've seeing that market structure shift. For me, this one is an internal one. However, the major one is about to happen here. Once you see a major market structure shift to the upside right about there, that is when, of course, you can be confident that the market is again going to be targeting the next, maybe swing high right about here. All these other swings, you can always be confident about them. Now, I've simplified my strategy in its most simplest way possible. It's a day trading strategy because I've realized also I'd like to not stay in a trade too long. And the reason why I only stop on the 4 hour, because it gives me at least some solid confirmation of what I need. Now, I also use candlesticks. However, the candlesticks that I just remove the wicks so that it is similar to the line chart. Now, upon closure of my candle, of any candle above these swing points that I've currently marked, I mark these swing points every day. And right now, this day, as you can see, right now, this candle that I'm recording is about, if it is to close above this, I have my criteria whereby I enter with a fixed amount of my target. On these other pairs that I have on my chart, I have a fixed target that I do have. Normally, I would target structure that is for a higher RR, which I'm not currently aiming for. I would aim to close imbalances and take out liquidity. That would also work. Now, this is what I'm going to do. Remember, trading is not 100% guaranteed that it's going to go in your favor. Now, for me, upon the break of structure to the upside right about here, I'm going to, before price comes for a retest and maybe continues to the upside, I'm going to capitalize on the immediate, because price is going to maybe come and take out liquidity or pick up some trade to come and pick more orders and continue to the upside. So what I'm going to aim for is just simply the few pips that price is going to go up, and then first of all clear. If you can see, I'm already having a very good confirmation. In about 3 hours, if this candle closes above, it's a guaranteed entry on my Euro USD, of which I'm seeing the DXY is going to give a faster confirmation, of which if the DXY gives me the fast confirmation, I'm not going to even blink. I'm just going to enter sell trades on my Euro USD for the day, and then just target a few pips and then be out with the trade. Now, there's a trade that I had opened yesterday. It didn't reach my target, which I had already established, and I closed this trade because I don't like holding my trades overnight. Now, for the GBP USD, of course, in about an hour, if this one closes below, it's a guaranteed sell for me, since I've seen also the DXY is giving me that confirmation. The reason why I only use the 4 hour is just for that specific reason. Now, the massive move in the DXY was caused by the USD JPY. If you can see, it broke this level, and this is a perfect confirmation, since it's part of the basket right about here. So around London Open, I really expect something nice to be happening. So I'll be opening sales immediately today on these other pairs. So I always prefer to keep my videos as under 8 minutes only. Now, the concept of hedging that I'm going to be bringing about is basically to just help you mitigate risk. You will never, I can guarantee this, if you're using a personal broker, you'll never blow an account. And mitigating risk is going to really help you in the long run. Just simply learn to cut your losses early enough. Of course, meaning that you have to identify where the market will invalidate you. But getting out of a trade, sometimes with a stop loss, is what makes you not to continue with the strategy. Now, this is Foundation 28 Forex Hedging. Now, if you've liked this video, please leave a comment, like the video as well, and make sure to subscribe to the channel so that I continue producing helpful content for you like this. Otherwise, Foundation 28 Forex, peace out.